Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I am absolutely thrilled that you're here. And I don't think I've ever been more excited about a podcast episode in my life. Okay. Now this happens to be my 500th podcast episode. Wow. And we're about to hit 10 million downloads, which just blows my mind. But the guys I've got on the show today, guys, okay, well, to say they're incredibly successful would be the understatement of the year. Now, I've been blessed to have interviewed each one of these fine gentlemen on my show previously, so I encourage you to go find those episodes to learn more about each one of them personally if you haven't already watched them or listened to them. Now, Albert Berriz was actually the first person I ever interviewed on my show, which is, I was just telling the guys before we started recording, which is a real funny story. It wasn't at the time, but I forgot to hit the record button. And then after an hour, I was absolutely mortified, but he's just a beautiful, gracious human being, and he's been on the show twice since then. But I digress. But anyway, so this episode is titled The Titans of Multifamily. And that's for a reason, guys, okay? I'm not sure that a group of this caliber actually has ever been assembled before. I don't think so. And this is really going to be something today. So let me introduce you to these amazing gentlemen who are on the call with us. And then we'll get into it. So the first one is Jeff Klotz. Now, Jeff is the CEO of the Klotz Group of companies. He's been involved in about 125,000 units. He's done 42 developments. In fact, in the last few years, they sold about 40,000 units. I think he's currently with 10,000 doors in inventory and 5,000 under development. So welcome, Jeff.
Appreciate that, Rod. Thanks for having me.
Absolutely. Next is Swapnil Agarwal, and Swapnil is the CEO of Nitya Capital, and they're currently over 12,000 units, about $1 billion worth of assets. Welcome back, Swapnil.
Yeah, thank you, Rod. Appreciate being here. And it's 20,000 units now.
It's 20,000. Okay, thank you. Awesome. Congratulations. That's awesome. So next is Keith Wasserman, and Keith is a partner with Gelt, and they're in, I think, around 15,000 units, about a $2 billion worth on that portfolio. Good to see you again, Keith.
Yeah, thanks for having me, Rod.
Absolutely. And last and certainly not least, my friend Albert Berriz, CEO of the Mckinley Corporation. Albert, how many units have you been in over your lifetime? I know you're in about 20,000 now. How many have you been involved with as a owner partner?
40,000.
40,000. There you go. Wonderful to see you, my friend. Wow. Guys, this is an honor, and I am absolutely humbled. And, as you know, I'm blessed to host the largest multifamily really commercial multifamily podcast in the world, but also the largest multifamily Facebook group with 36,000 members. And I did a post yesterday and I asked them what questions they'd like me to ask you guys. And we're definitely going to get into some of those. But before we get started, I just want to say this. We certainly can and will talk about some specific nuances of multifamily investing, but I also really think my listeners would love to hear how you guys how guys like you think, because you think differently than other people. And then really maybe what drives each of your incredible, what you feel drives each of your incredible success. And then for me personally, I'd love to ask you some questions around how you manage and run what each of you have very large organizations. So let's have some fun and get into it with no rhyme or reason to, the sequence of these questions. But I've got a list of them here. And the first question is kind of a big global one. And Albert, I want to start with you. What do you think is the most important trait? Because let me back up for a second. So my listeners are aspiring and all the way up to extremely successful multifamily operators. And for the most part, the larger operators syndicate and joint venture and do things like that. And then there's the people that have a few duplexes. What do you think is the most important trait a person needs for success, Albert?
I would say persistence.
Yeah. Love it. Who's got a different answer?
Yeah, I would say, Rod, for me personally, I think it's the risk-taking ability. Because I think all of us, every human being we know wants to be successful. but what are they willing to bet? How hard are they willing to work hard to achieve that success? And I think in that, the most important ability or skill is how much risk are you willing to take, right? Because as humans, we're always looking at the downside or the worst case scenario. But if anybody, a successful entrepreneur, can put that aside and focus on the positives and believe in the passion that that person has, I think that's the most important ability for me.
Great answer. Jeff, anything to add?
Well, I definitely would agree with Albert. I mean, I think that persistence is certainly a requirement. Maybe I might even add the word relentless in front of it. You know, a relentless pursuit of persistency and intensity and obsession. I mean, I think you've got to be a little bit crazy, I guess you could say. You got to be a little bit odd, unusual to do what we've all done, and to really jump into this business and try to accomplish what almost everyone's goal is. And I think that a normal approach just isn't going to work. You've got to be that much more intense, that much more driven, that much more hungry. And then I'd also go with what Swapnil said. I mean, I think the ability to take a risk, everything you do in life's a risk, but the ability to assess those risks and make, risk adjusted decisions, I think is critical, right? Because, if you take too much risk, it could be your downfall. If you don't take enough, you might not ever grow. So I think that, it's a combination of all the above.
Great balance between the two. Great answer, buddy. Keith, anything to add?
So it sounds like you guys are all describing me with these comments. Relentless.
Stop it.
Persistent. I mean, you could ask my wife. I chased her for 9 months before I got a date even out of her. But I'd say all of the above are important. Thinking different, like zigging when others zag. When we started, it was December of 2008, the bottom of the market. People were scared and running away from real estate. And that's when I'm like, there's blood in the street. I smelled it and I said, let's dive in head first. So I think all these comments are what I would say: persistent, thinking, differently from the pack, just entrepreneurial and just trying to think differently and have a vision. So,
Sure. Let me ask you the next question is, what do you think is the most courageous thing you've ever done, Keith?
I mean, for most people, and for me too, I think the hardest and scariest thing is just starting, jumping off the edge. And, it was so scary. I had no real estate experience, and we bought a 4-unit building. We scrambled, we got an FHA loan. We had to borrow money from a friend. We maxed out our credit card, and it was very daunting, but we had good mentors that we really asked a ton of questions to and held their hands. And just the first acquisition and that whole process was the scariest thing. And looking back, I'm glad we did it, but that was definitely
Nice. How about you, Albert? What most courageous move you've ever made, if you can remember?
I think probably just a family story. My father was an immigrant. He came over here from Cuba in 1959. And it's a story that we've retold in our family over and over again over our entire lifetime. And I think the courage in our family, he gets all the credit, because I certainly couldn't have relocated my family at 43, not speaking the language and having nothing but the shirt on your back. And that for us in our family has been a guiding light in terms of an inspirational way of life. He's no longer with us, but his efforts and what he did and how he showed us to do things will always be with us.
Well, that's a very modest and humble answer, but thank you for that. That's a beautiful story. Jeff, how about you, buddy?
I was actually going to say both getting married and starting a family is probably the most courageous thing I've ever done. Next to that, every next biggest deal is probably the most courageous thing that I've done. And that's kind of happened progressively throughout my life. I was blessed to have a great father who would have encouraged me to do anything. I remember first getting started in this business as a teenager. I could have asked him anything. Dad, should I go buy the Empire State Building? He would have said, sure, son, go do it. And so I think that the encouragement I had as a young kid is what really maybe gave me the courage to do what I've done and to jump in with both feet and make it happen. I didn't know any better at the time.
Yeah, you're blessed. That's awesome that you had that foundation. Swapnil, how about you, buddy?
Yeah, similar to what Albert was saying, I'm a first generation immigrant. So I came here to America when I was 15 years old in 96. So I've done things differently and things have been harder for me than a normal American has been, but it just made me much more stronger mentally and personally. And I would say the most courageous thing is when I left my job to start a business. That was definitely the hardest thing.
Yeah. I'm going to ask you the next question. Did you have any mentors on this journey of yours? And what did they help you with if you did?
I really don't. I really didn't, Rod, because my circle, people I hang around with have worked their careers in corporate life and had good jobs. So when it came to entrepreneurship, the only person I can look back to was my dad, because he came to America and he didn't have any options. So he had to run a small convenience store. But he did it because he didn't have any other option. For us, who have college degrees and had experience working in corporate America, for us, it was a harder challenge to take on, to become an entrepreneur business, to leave that cushy lifestyle and have money in the bank and risking it all to start a business. So yeah, mentorship, I would say I've established mentors along the way, which are mostly my friends and close friends and my partner. But to say that I had a mentor who I spoke with before, I didn't have any.
Yeah. Okay. How about you, Jeff? Any mentors in your past?
Yeah, I think so. I mean, the mentorship that I've received over the years has been a tremendous help to me. My earliest mentor was my father, even though he had literally zero business experience. I think it was he was just trying to do his best to encourage me and set me on the right path. But I've had a number of mentors, and I won't name any names because they're extremely humble individuals. I've got a gentleman today that we've done hundreds of millions of dollars worth of transactions with, and he's probably been the biggest impact to my life professionally. And it's interesting because if you ask him, he would probably say he's failed as a mentor. But he keeps pushing me, keeps driving me, and keeps teaching me, whether he will admit it or acknowledge it. But he's been just a huge impact to me and really helping me see, bigger, better, beyond not just the big picture, but the whole picture. And I think there's a big difference between the two. And so, I would say that, aligning yourself with someone who can fulfill that mentorship role is critical for anybody, whether you're the president of the United States, whether you're, a CEO of Amazon or something like that. Everybody needs somebody to push them, to teach them, to mentor them, to help really be a good, solid sounding board. And I don't know how you can really be successful without that in your life.
Yeah, I agree. You had to go political though, didn't you? I'm just messing with you.
President of the United States.
I'm just messing with you. I'm totally kidding. But you're right. I mean, we all need people that have no secondary gain from their interaction with us. And sometimes it's hard to find, when you're communicating with people, to find someone that doesn't have some gain from their relationship with you. But Albert, I think I know your response here because we've talked about it before, but would you share it again, please?
Yeah, my business partner, we've been together for over 35 years now. We're 11 years apart in age. And so that age difference has always served me well because he had 11 years worth more of experiences. And it's been very helpful for us in our relationship that we're both partners. And he is also my mentor. It's been terrific.
Yeah, nice. How about you, Keith?
Yeah, I'd say both my father and then my partner, Damien's father, were our original mentors. Damien's father was very involved. He was doing his own flipping homes and buying some small buildings and just taught us how to deal with contractors and tenants and management companies and just really on the ground, kind of stuff. My dad was more of a bigger picture and helped us with a lot of the legal work and just business decisions and dealing with brokers. And so we definitely had good mentors. And then later on, we brought on another, we call them the gray hair partners with the experience, someone else that had experience running larger multifamily properties and made him a partner. So I'd say definitely surrounding yourself with good mentors and partners from an early stage in your development as a person and a business person is very crucial for sure.
Great, great. I'm going to ask you the next question, which ties into, you guys all know, and we all know that this multifamily business, certainly even in the hundreds of units is, let alone your scale, is a team sport, that it involves other people. It involves bringing other people in. And what I've seen a lot with my students, and I'm blessed to say they're approaching 40,000 units, which isn't on your scale, but for the last 3 years, that's not bad. And what I've seen is that you get these people together and they each bring a certain superpower to the group, to a team, so they can go out and take down assets, so they can do asset management, so they can do the due diligence. What would you say is your superpower as it relates to this business? What do each of you bring the most of to your, now, of course, in your cases, you're all leaders now and you're CEOs of your companies, but maybe before you were in that capacity, what role did you see yourself playing? Was it all hats, or was there some specificity? And start with you, Keith.
Yeah, I mean, in the beginning, it was just Damien and I, and he was more the, I don't know what you call it, the inside guy dealing with the man, the overseeing the CapEx and the contractors. And I was more the outside guy, the broker relationships, raising capital, dealing with the attorneys. And we continued doing that. And then we just kept hiring where we had holes. We needed someone that was good at underwriting deals. And then we needed, Damien stepped out a little and we hired a project manager. And then we had, someone that specialized in acquisitions. And we just kept hiring in places where we felt like we could teach, train, and empower, and then let go and focus on where we can move the needle more. So nowadays, my biggest time and focus is on strategic vision, like where we want to take the company, what kind of, we made a decision to get into self-storage, for example, a couple of years ago. We started buying mobile home parks. We started a technology company, and then marketing of the business and capital raising, essentially raising money from our individual investors. We deal with around 1,000 now individual investors. It's a syndication business. So That's where I've put myself, because that's where I'm strongest suited, just telling the story of Gelt, empowering the team to do what they're doing best in their each division, making sure they're working together well and steering the ship, but really focusing on money raising, marketing, and sort of strategic vision. Nice. Thank you. Albert, I know it's been a long time since it was just a small company for you, but do you recall when you first started working with your partner, did you have individual roles, or did you guys, did you divide and conquer, as it were?
Yeah, we grew up as, we're dinosaurs nowadays, but we grew up as old-fashioned owner operators. So there wasn't anything that, in terms of division of business that, that we wouldn't do in the day. I do think that growing up as an operator was a distinguishing characteristic for us as a company, not just as individuals. And I think it served us well in our career, because not only is it making us, a good operator in times like this, but I think it's also made us a good investor, because every decision we make on the investment side, we have to live what's on the operating side. So I think, having that dual responsibility of always being both the owner, the operator, and the investor has really allowed us to really put things in perspective as we go through our business and our investment life. Nice. Jeff, how about you?
Wow, that was well said, Albert.
Right.
I could have sworn he was going to say his good looks was his superpower, but clearly it's his wisdom now. I think that I don't know. I've never really considered myself to have a superpower. Partly because I've in this business, or in business in general, I've never really considered myself that smart. I just had to outwork everyone else. And so if I were to have, I guess if you were to force me to identify a superpower, it'd probably be my work ethic. Coming to the table, showing up to the dance, or whatever you want to call it, with this kind of deep understanding that, everyone else at the table's more experienced, they're older, they're better educated, and they've probably got more money than you, really forced me. My only option was to outwork them. And so, that's both my superpower, if you want to call it that. And at times has been my kryptonite, because I don't really know when to stop. It's literally just a progress.
Yeah, we're going to talk about sacrifice here in a minute, and we'll circle back to you on that for sure. But okay, fair enough. Swapnil, how about you? Did you find yourself focusing on one particular role initially?
No, Ron, when we started, I was basically doing sitting at the properties, trying to collect the rents, acting as a manager, drafting company agreements, raising capital, signing on the loans, finding lenders, raising equity. So I was basically doing everything. What I quickly realized was that in order for us to grow really fast, if I spend my time in the weeds and managing every aspect of our business as an owner operator, it will limit our growth. So I would say the decision that I took in 2014, where I didn't really care about how much money I made. And what I did is I just kept hiring people to fit the role so that they can manage the growth, because I knew that the timing won't last too long. We were buying in 2013, 14 as the lenders open up, as the liquidity came back. I mean, obviously the prices, we've seen what happened across the country in the last 6-7 years. So I wanted to go really fast, go from 0 to 20, 30,000 units in 6-7 years, which we managed to grow. But I think for me to be able to not worry about my own personal profitability or my company's profitability, but looking at a bigger, further vision and investing in that vision, I think has paid us back pretty good.
Nice. So do you, and this is getting right back to brass tacks, guys, but this is, again, consider my audience. And so do you, Swapnil, talk about your goal setting process. Talk about how you have done goals over the years and maybe how often you do your goals and what that might look like.
Yeah, I'm actually very opposite about that. I don't set goals. So for me, There's big goals, right? I want to have 100,000 units. Now, I don't define when, how, where. All I do is I try to make my actions work towards that goal. And I hope that everybody sees how passionate and the work ethic we have to grow that company. And we're very opportunistic, right? If I say today, I would love to have 100,000 units, but hey, guess what? The opportunities are in commercial office because the cap rates are 9-10% now. I assume there's a risk there, but there's a reason why the pricing is cheap. So for us, it's about growing where the opportunity is and being opportunistic. So that's why I don't try to limit ourselves by setting specific goals.
Okay. Well, you named one, 100,000 units. That's a goal. I mean, okay, fair enough. Jeff, what about you?
I got in an early habit many years ago to sit down at the end of every year and roll out a set of goals for the following year. I've always been pretty disciplined at that part of it. Typically by about mid-year, I've forgotten the goals or we've surpassed the goals or what have you. I probably need to get better at following through with the goals, but I agree with Swapnil. I mean, goals can be both good and bad. The ability or the willingness or the understanding that they must be recalibrated based on, the market, the environment and what happens and to this and to that. And so, we've always tried to be as flexible as we can and not let our goals limit us, if that makes sense.
Well, what are your goals for the future? Let me ask you that. And I'm going to come back to you, Swapnil, because I would like to know what you guys have planned for the next couple of years, let's say.
For me, every year is a repeat of exploring my potential, right? So I want to accomplish as much as I can. I think that we want to continue to grow the business. We went through an evolution of our organization about 4 or 5 years ago, where we really abandoned the original kind of 20-year goal or mindset of being one of the most active operators in C-class housing throughout the Southeast. We built a portfolio of 40,000 plus units. We were buying and selling a lot, so our velocity of both buying and selling was pretty high. I think we got about a 5-year stretch of over 8,000 units a year. And when that was all done, once we kind of accomplished that goal, we were somewhat struggling with, okay, what now? And so, for us, the natural progression was to really increase the quality of our body of work, to really evolve from a focus on quantity to a focus on quality. And, that's been our challenge over the last 4 years in a pretty, what I'll call a peaked market cycle. But we've had a lot of success and we're having more fun today focusing on a much funner quality body of work. And so I think for us, the short-term goal is to really perfect that transition or that evolution within the organization and to accomplish what we did in the middle market C-class sector throughout the Southeast and beyond in a higher quality sector. You could call it the A-class sector, but I hate to use that type of terminology. But And so I think that's probably our shortest term goal. But I think long term is we want to continue to build a dynamic organization that everybody who's a part of it enjoys. We're delivering value to both our shareholders and our residents, and we're having fun doing so.
Love it. Love it. Love it. Flight to quality and focus on the core. Love it. Sure. Swapnil, what are your goals for the future? Now, I'm sorry, I'll get with you, Albert and Keith, in just a second. Same questions.
Yeah. I would say, Rod, my goal is to build a better organization when it comes to management. We all know, as owner-operators, when it comes to property management, it is a very difficult business. I know what the issues are: better hiring, better onboarding experience, training. And those issues still exist, right? At least in my organization. I want to build an organization that we can't be perfect. I don't think any property management can be perfect because the business is just so tough. You're dealing with people. There's so many chances for communication gap and error. I just want to build a company that gets better every day at a certain percentage a day. Just training better, developing better talent, staffing the properties better, because we all know it comes down to the staffing. If your property is staffed properly, your regional's job is easier, your supervisors, your VP, everybody's doing a better job. And operations, as we know, is a very difficult business. So I want to get better because I know the growth is coming, whether it's 100,000 units or 200,000 units, it's going to come, matter of time. I just want to have an organization that can manage that growth in the best way possible.
Yeah, no, I love it. I love it. Every business is nothing but people and systems. And when you dumb it right down, Albert, how about you?
We're focused on building a generational business. My partner started our business 52 years ago. We've been together for a very long time. And now we're looking at, over the last 10 years, what does our business look like without us? And how do we get this business to a different place? And so every decision we're making on the asset composition side, everything that goes into that is really about, can we leave a business that will transcend our lives and it will continue? Because quite frankly, we are fundamentally strong believers that, holding generational real estate for the long term is the best cash flow wealth formula that you could have of any business. I mean, if you look at all investments in all of the publicly traded companies in the United States, all real estate in this country is about twice that number. So if you're really looking to build generational wealth, long-term cash flows, long-term perpetual wealth that you can transcend and pass on to different generations of your family, we don't see a better place than real estate. So, we're really right now about what does it look like without us? Because that's going to come sooner more than later.
Yeah, no, I love it. I love it. And let me give a kudo to you. So yes, we're talking about business development. I want to get into some questions, organizational questions around staffing and things like that, and KPIs and things of that nature. But on that note, I was reading the book Traction about the EOS system. Yes. And your company was one of the case studies in that book, which was just awesome to see, my friends. So I just want to give you a shout out because we've implemented that system in our company as well, and it's been a game changer. So do you any of the other guys use that at all? We don't. Oh, you should look into it, Swapnil. I think you might really like it a lot, and I can send you some information on it. Anyway, Keith, I didn't want to leave you out of the conversation. And I even forgot the question. Hopefully you remembered.
Talking about your goals and I'd say, originally when we started the business, I didn't even know how big it could really get and stuff. And our, the goalpost just kept moving forward. I'm like, oh, let's have 1,000 units. Let's have 5,000. So it's like, it's nice to have those goals, but yeah, I have like short-term goals. And then every year we do annual goals, and I try to put down like a 5 and 10 year goal. But I agree with Albert that, real estate, is the way I like it is running it is buy and hold. And if we do sell, always try to 1031 exchange. And, it's just trying to really grow the portfolio. And if we do sell something built in the 70s and 80s, try to upgrade it to maybe 2000 and newer, and just try to grow the portfolio. And that's why we never wanted to be a fund where we had to have a life cycle for things and sell off, or have institutional joint ventures where we have to sell in 3 to 5 years. And we've always aligned ourselves with other investors like ourselves that have long-term, horizon and goals. And I love that real estate can be, generational and passed down, and all the great tax benefits. So we've built the business from the ground of always having individual investors like ourselves that want to create wealth and build it slowly over time, conservatively with all the tax benefits. And I also from the beginning made a conscious effort not to get into the property management business because I thought it would bog us down. And I think we've been able to grow so fast because we didn't have to worry about having, hundreds of employees and constantly training and hiring and firing. And it's, I like having a smaller team. We have 23 people in our office, and, we outsource all our property management to 2 or 3, third-party management companies that are, we work very hand in hand with. So that's
interesting.
Yes,
I think you're probably the only one on the call that's not vertically integrated that way. I know Albert manages all his own stuff. Jeff, you have a management arm as well, yes?
We do, yes.
Yeah, and at Swapnil, you're self-managing, correct? I forgot to ask, and I should have asked this starting on. So where are the bulk of your assets, Keith? And I'm going to ask each one of you the same question.
Yeah, we have almost half the portfolio in Denver now. Has been our biggest market, and we started buying there 5-6 years ago. So we've entered pretty early in this cycle, doing extremely well. Next up, we have a good presence in Salt Lake City. We're in the Seattle metro, Portland, Albuquerque, Southern California. And we had a big presence in Phoenix. We exited a little early in the cycle, but I feel like better late than never on that one. And then we had a good presence in Reno that we just sold to our partner in that one. So
nice.
A lot of major markets.
Yeah, Denver is my home. I mean, not my hometown, but I lived there for 30 years and know it extremely well. And I had 500 houses there at one time. And if I still had those, they'd be free and clear, and I'd be netting about $600,000-700,000 a month. Woulda, coulda, shoulda. Anyway, that's my pain. One of my pain stories. Albert, how about you? I know is it primarily the I-4 corridor between Tampa and Orlando, or?
Yeah, we've done two things over the last, I would say, 7 years that have been intentional as part of our generational business. We've exited retail, we've exited office, and we had a huge portfolio of each. And then we decided to look at where we were best at in terms of being an owner operator. And we have 2 core markets: Southeast Michigan. We have we're the largest operator in the metropolitan Ann Arbor market. And then the other is Orlando and Tampa, all throughout the entire I-4 corridor. And those are our 2 markets today that we are focused on. We have significant market dominance in both those markets, and markets that we like. And we also are comfortable that they can be with us 10, 20, 30, and 40 years from now. We really are comfortable with the dynamics of all those markets.
As an aside, I want to ask Jeff, you and Swapnil, but as an aside, have you, actually, let's wait on that. I want to talk about the impact of COVID, and with Disney and everything in Orlando, I'd like to open that conversation in a minute, but let me ask Jeff and Swapnil where their portfolios are. Jeff, you can go ahead and go first.
We're active throughout what I would consider the main parts of the Southeast United States. So Florida, Georgia, North and South Carolina, Tennessee, Alabama. Most active in Florida and Georgia at the moment. At one point in time, we had probably assets in, I think, 10, 11 states, maybe 5, 6, 7 years ago. But today, Florida and Georgia probably take most of our time and attention. And those are our 2 favorite markets.
Okay. How about you, Swapnil? You're very Texas specific, aren't you?
90% is Texas. And then we have Las Vegas and Salt Lake City and Kansas City.
Nice. So let's, one of the questions that I got from the group, and we're going to start getting into some of those, was, this whole impact of COVID. There's a lot of fear with operators right now around, what could be coming down the road, the eviction moratorium, the market being so high. And another question was that they wanted to ask was if you're a net seller or net buyer right now. But let's start with the dynamic of COVID. So Swapnil, if you would go ahead and start, how has it impacted your economic occupancy, and what do you see? Do you have any thoughts about what's coming?
Yeah, I think we were relatively fortunate. So I think depending as a portfolio as a whole, we were 95% collection from pre-COVID levels. But going forward, this is what I think. I think that cap rates will continue to compress and pricing will keep going up. And here's my reason for it, because we know for a fact that interest rates are going to stay very close to 0 for the next 3 years. So if you look at the historical data of the last 100 years, you'll see the delta between 10-year US Treasury and the cap rates have always been around 275 basis points. And what we are seeing now is that delta, well, the treasury ran up in the last week or so, but the delta is 4 to 450 basis point now. So with interest rates, you can borrow currently with agency at 2.5%, more or less. I think the cap rates are coming down in mid threes, which means pricing is pretty much loaded to go up quite a bit. You're seeing lenders coming back, the liquidity coming back, and there's so much equity waiting on the sidelines from large institutions just to deploy. So my personal opinion is the pricing is going to go really, really high and be very aggressive.
Okay, thank you, Jeff.
I forget what the question was.
Impact of COVID on your portfolio, and about the future.
I think COVID's impacted not just the portfolio, but our entire business. Our strategy since day one was we really coined the term business as usual. We tried to keep things as usual as much as possible. Of course, we wanted to protect our residents and our teams the best we could, but we kept all of our properties open, all of our leasing offices open, all of our amenities open. We went out on a limb, and I think it so far, knock on wood, it's paid off pretty well for us. We had a very, very minimal effect at the property level, but still some effect. I mean, we've seen bad debt collections tick up ever so slightly, and in the very beginning it was almost unnoticeable. But 9 months into COVID, even a small fraction of a basis point starts to add up over time. I mean, our portfolio. 10 years ago, our portfolio was running 5, 7, 8, 10% bad debt or collections or delinquency monthly. Prior to COVID, we were less than a percent, right? So we were measuring it in terms of basis points. That's grown some, but not. We're still meeting budgets, so our budgets are entered into the system November of the prior year, and we're still hitting budget at through end of October for our portfolio overall. Some a little bit above, some a little bit below. So I think that's the good news. The real challenge is I don't know how long it's going to last, right? And so. If it keeps up like it's going through next year, end of next year, 12 months from now, it's going to wreak havoc on the industry. You brought up the eviction moratorium and even the forbearance issues, and I think that's just another method of kicking the can down the road. I think that's going to create. I think it's a very dangerous and slippery slope. I think that's creating a lot of problems. Half the folks you talk to that are dialed into the court systems nationwide, or especially in our markets throughout the Southeast, they predict that there's a year plus of backlog on just evictions alone. And so, okay, they open the gates come January 1 and you can actually start to file evictions. What happens then? You might, if you're not already in line, or if you're not sure what to do, you might still be trying to evict folks in 2022 that should have been evicted in 2020. And so to me, that's a big problem. Now, it could go either way, right? I think any answer I give you, I'm 50% likely.
Yeah. It's a guess. It's a guess.
But I tend to take a different approach than Swapnil. I tend to think that you're going to see a really rough road over the next couple of years, and I think that you're going to see a strong difference. I think half the folks are going to think pricing should be better, and I think the other half are going to be willing to pay a compressed cap rate or what have you. And so, we're optimistic that we'll get a better chance or a better opportunity to buy more real estate next year because of discounted pricing. We already see in a lot of the markets what I'll call a shift of the tide from a seller's market to a buyer's market. Now, it's a partial shift. Half the sellers out there still think it's right. 2019, and half of them are scared to death. And so. I think if you can buy right, you're going to find some good opportunities next year.
Yeah, we're still buying, but we're getting a lot more calls from brokers than we ever have. So if that's any indication. Well, thank you, Albert. How about you? What are your thoughts? How has your economic occupancy been impacted, if at all? And that's where I was going with that. When because I know you're heavy in Orlando with Disney and everything. Has there, what sort of an impact have you seen?
Yeah, I would say, I can give you an investment view and then I'll give you an operator's view. But I would say that COVID has made us a better operator.
Yeah.
It forced us to take our business virtually. And what I've been saying is that we've gone forward 10 years in the last 10 months. Mm-hmm. So we are doing things now that I never dreamed of doing and we were forced to do. So I actually think that COVID has been a great injection to force owner operators to just be better. So I can go on and on what that means, but I can tell you we have become far better operators in the last 10 months. And there are things that we never dreamed of doing that we did do because of COVID. Now, as to the investment cycle, and I can speak specifically to Orlando, but I will tell you in general, I would share Jeff's beliefs. And I do think that we are in the early innings of what will be a very protracted, difficult situation for our industry. And the reason why I say that is that, don't forget, this just started in March of this year. And so we're just 8 or 9 months into this year's cycle. If anybody believes that 2021 will not be a fully COVID impacted year, they're nuts. Yeah. By the time you fully discover the vaccine and then you disseminate the vaccine to the entire population, 2021 is lost. What we're saying internally in our organization, 2022 is lost. We're sort of looking at 2023 as the first, what I would call, realized year post-COVID. And I think if you aren't viewing it that way, you're probably not doing the right things to get to the other side. We have an enormous amount, not a little amount, we have an enormous amount of set aside liquidity because, we were there in 1991 and the theme, as you remember, Sam Zell and many others, stay alive to 95. Well, my current theme is stay alive to 23, because I really think that's going to be the first real stabilized post-COVID year. I don't think it's 21 and I don't think it's 22. And as it relates to Orlando, quite frankly, if you look at Orlando as a location to where to invest, and we're talking about 2 years in the life cycle of a 100-year investment cycle, it's not material. So we're not worried about 1 or 2 years will do for us in a market like that. We're happy to buy as many things as anybody wants to sell in a market like that at the right price. So, but I will tell you, no, I don't think, anybody who takes that shorter term view in a market like Orlando, then this is a slow baked business. This is not a microwave business. You can't get from here to there unless you're very patient and have a very long-term view.
Love it. And I couldn't agree more. I love it. Keith, what are your thoughts?
Yeah, I share. So I'd say one, I got to hire Jeff to manage my properties because we're only collecting 93% of rents. So not as good as Jeff's portfolio. It's interesting. Like we have a few sort of dogs that bring it down. The ones that are more, lower rent, blue collar, where people couldn't really work remotely as much, have been affected the most. And the newer buildings and the better, higher income areas, higher socioeconomic areas have performed better. But like Albert says, our management companies have done a superb job going digital. I'm a co-founder of a financial technology company called Demuso, and this COVID has really accelerated our growth tremendously. We essentially allow our clients, which are all property management companies or owner operators, to go fully digital with their rent collection processes. And a lot of, unlike Jeff's management offices, a lot of them here on the Western Coast were closed and they were forced to really go digital. And it's actually been a boon for our residents. We've also seen historically credit card, payments for rent has only been usually 2% of all rent payments. It jumped during COVID to around 8%. And a lot of the landlords were eating that, processing fee in order to, get the rent in the door. And we've done some tremendous innovation all around the payment of rent. And it's been a huge boon to our business. So definitely, I think virtual touring, virtual rent payments, all digital, a lot of exciting things that I think will stay, not just now during COVID. And regarding what I see in the future, when we're underwriting deals now, we're underwriting flat rent growth. So no rent growth for up to 2 years. And normally we would do market rent growth of 3% a year. And that's really hurt us when we're trying to buy deals, because I don't know what our peers are doing, but they're able to pay more for stuff. And we've been outbid left and right. We've also ratcheted up, the amount of bad debt and just the amount of concessions in the marketplace. And I think also we've been doing it for 1.5 to 2 years, like Albert says. So, but like one of my mentors always says, he tells his investors, the building we're buying now, it'll probably be worth a little less a year from now, 2 years from now. But in 5 years from now, 10 years from now, that the rents are going to be much higher. The value is going to be much higher. It's a long-term game. So I like Albert we're still buying, but selectively. We're able to pay a little more if we're selling something and exchanging into it, but it's very difficult still to buy. But I have long-term, optimism, short-term, just caution.
Yeah. All right, good. And so tell me about, and I'll let you answer the next question, Keith. Tell me about your biggest failure or lesson or seminar, I call them, that you had in this journey of yours? And this is a question that came up quite a bit from my people in the audience. Talk about a lesson. So what comes to mind when I ask that question?
Yeah, I'd say early on, I learned that just because something's cheap doesn't mean it's a good deal. We were buying in the roughest parts of town, and it was so cheap per unit, but and on paper it looked great, but technically it was really tough to make good returns because we had such high turnover, and we had to do a ton of evictions, and just it was the tenants were trashed the units, and we had to spend a lot of money renovating them, and it was just a tough learning experience. So we started paying a little more to buy in better areas, and maybe on paper the returns didn't look as good, but still in the long run they've actually performed even better. So I'd say just one of the reasons, one of the learning experiences, just because something's cheap doesn't mean it's a good deal.
Okay, thank you. Albert, how about you? Lesson or seminar?
There was a point in time where I lost a very significant amount of money in one transaction. And at the time I thought it was going to be catastrophic. And the amount was $10 million in a single transaction. And
wow.
So looking back on it now, it was one of the best things I ever did. I know that sounds funny to your listeners, because one, I had to do a lot of different things to come back from that. And two, I'll never forget that experience. And so it is a learning experience, albeit a very painful one. So I think that there are points in time where you make such a catastrophic mistake that you either persevere and persist as an entrepreneur and as an investor, or you fold. And so, but if you don't fold and you can persist, then you can come out the other side a much more knowledgeable and a much more, I think, intellectually thought-based investor.
Nice. And I can certainly relate, because I lost 50 million in 2008, but it was, anyway, it is very sobering and humbling and educational for sure. Thank you, Albert. Jeff, how about you, buddy? Talk about a seminar or
Well, I would certainly agree with you. The wounds from 2008 are still fresh.
Right.
They haven't healed, that's for sure. And so I don't know that I'm ready for that again, but certainly would love to take advantage of another opportunity to go on one heck of a buying spree. The lessons learned, I think for me, probably the hardest lesson to learn was I spent the first 10 years of my business trying to figure out how to grow it. It was a monopoly game. I wanted to buy everything and anything, and my biggest challenge was access to capital. Like many or most small businesses, being capital constrained is a challenge. And so, but once I figured that out, once I understood and began to understand capital markets and figured out how to access capital, then it was a whole new problem. And we started to grow like gangbusters. And so, the big lesson there was, growth is easy. Managing growth is hard.
Yep.
And so the concept that you learn as a kid, right? All growth spurts are typically followed by growth pains. You're really managing growth, for sustainability was probably the hardest lesson to learn. We of course learned the lessons that Keith mentioned about just because it's cheap doesn't mean it's good. One small comment to that, 15, 20 years ago, the cheap markets or the bad area, the entire economy was different. The world was different. You could C-class multifamily was ran differently, and a lot of the country never really fully recovered. Or a lot of the rental demographic never fully recovered from the last downturn in the market. But I think for me, just controlled growth, resisting that urge and that desire, even that ability to just grow wildly or rapidly, was probably the hardest lesson to learn.
That's been a common theme, with you guys, maybe with the exception of Albert, because he's been at it a lot longer. But fair enough. Swapnil, how about you?
Yeah, for me, I would say when it came to, the whole business plan, the thesis was buying value add multifamily Class B apartment complexes. So that whole concept about value add was always, and still is to an extent, where you're rehabbing a unit with $8-9 grand, a unit, you're putting new floors, and you're trying to get some rent bumps in return, right? I would say that it's a lot harder than being said. And we've learned that in the last 5 years.
I'm sorry, a lot harder than what? Forgive me, I missed
than
it.
the reality. It's a lot harder to achieve that rent bumps, and especially if you are going to be very stubborn about, I'm only going to lease out these units at these rents, then the issue is you're going to have a lot of move outs and your move-ins are going to be minimized and you're going to see a drastic drop of occupancy. So over the course of time, we've learned to be less stubborn about the rent bumps and what actually we call and define value add. That's what I would say has been the biggest learning for me.
Interesting. Okay. So let me ask you this now. How big is your organization? I know you have a management division as well. How many employees under your whole umbrella?
Yeah, we have 800 employees and we have 65 in the corporate office.
Okay. How do you, and I would like to ask all you guys this question, it ties into the conversation that I've mentioned about that book Traction and EOS. That's kind of one of the ways that someone can do what I'm going to ask, but how do you hold your team accountable? And I would love to, I don't want to go too micro, but a little bit micro, and maybe how as an organization, do you have, is there a hierarchy and how the whole company, is held accountable and everyone in it?
Yeah, I would tell you, Rod, that is probably one of our biggest weaknesses to hold people accountable.
Okay.
Because the way we've grown so fast, and I've entrusted a lot of key executives that I've known from my past life and my past friendships, I just don't have the time to micromanage and hold them and follow up with them. And I think it's probably because of my nature and personality and the growth that I'm envisioning. I haven't put those accountability procedures or systems in place. And that's one of the areas we really want to get better. But as of now, I think it comes down to your own individual and executives' passion and your allegiance to you and the company, which is what a lot of them are holding themselves accountable for. But as a CEO, I think it's one of my biggest weaknesses to hold people accountable.
Well, very impressed with your vulnerability there, and I do. We are going to talk offline because Albert, I think, can speak to how powerful that EOS system is, and Albert. In fact, let me skip just a second, Jeff. So can you speak to it a little bit, because I know it's been great for us.
Okay. Well,
this is like a commercial for it. Sorry, I didn't plan that.
No, I'm not familiar with the system, actually. I'm taking notes because, like Swapnil, I'm still learning how to hold people accountable. I would literally identify it as our strongest weakness as well. Both the desire to grow rapidly, the desire to create, good, fun, friendly relationships with your team, and just the naivety of not understanding how important accountability and boundaries and those types of things are to an organization that's growing rapidly. And so, we clearly understand that it's a big issue, and our next round of growth will be impacted much differently by it than our last round of growth. But we're struggling with it. And so when you're talking about this EOS system, it's something I've never heard of, but I'm taking notes, and I'm still trying to learn something new every day, right?
I'll get you some more information about it as well. I didn't know that. I'm actually kind of surprised to hear that, which is based on the level of success that you guys have. But Albert, could you speak to your experience of it just for these guys, since they've got you on the call here?
Yeah, it was transformational for us as a business. We were, I think, Gino Wickman's first or second client when he was starting his consulting business. So we were in there on the ground floor. That's why we made it into the book. Right. But we'll say that, and we morphed one or two iterations since then. But the fundamental concept, which still stands today in our business, is that we have what we call CEO Team One. It is a CEO leadership team. It's 9 individuals. Those 9 individuals either win together or lose together. They have one focus. They get up every single morning and they do 9 different things, but only with one outcome. And so we hold them all collectively accountable. There is no one up or one down. It's either you all win or you all lose. And I think so. What we learned in our days with Gino was, until we got everybody together on one outcome, one focus, one thing that we do well, and only one thing that we do well, then all of a sudden things change, because there was no more pointing of fingers. There was none of those things. So, we're very focused on what we call CEO Team One. We get together regularly. We get together every Monday, every Friday, And everything that we do is CEO Team One oriented. There is no individual goals. It's all collective outcome.
Love it. And yeah, and guys, that's probably one of the biggest things in that whole process. And I'm sure there are other processes like it. There's there's that book, The Rockefeller Habits, that
Sure.
kind of was a precursor to traction. But let me just say one last thing about it, and that is, one of the things they have you do is, instead of an org chart, you actually do an accountability chart, which is fascinating, okay? Because it's completely different than an organizational chart. But anyway, I don't want to belabor this, but Keith, do you have anything to add to this, this accountability for your team conversation?
Sounds like I got to go buy this book, Traction.
All right, now I don't want any of you to get it. It's going to come as my gift to you, along with some other materials that I have. But yeah, sounds great. So let me, Keith, you can answer the next question. Who is the person, alive or no longer alive, that you admire the most, and why?
Oh man, the one person, like in business or in life. I mean,
it doesn't matter. Just
Wow.
whatever comes to mind. The person that you admire in your life the most, and why?
I'd say the person I admired that had the biggest impact would be probably my grandmother, who's a Holocaust survivor and came to this country also with nothing, and really was the matriarch of her family. And she really was a strong woman. She passed away a couple years ago at like 99, and her biggest thing was just family, and really loved her family and wanted the best for everyone, and just getting us together. And I think she was probably the strongest person, and made all this happen. Without her and her tenacity and courage, we wouldn't all be here. So,
wow, that's beautiful. That's beautiful. Albert, how about you, my friend?
Colin Powell. I mean, if you want to learn anything about leadership, read about Colin and Powell and his life, and he's absolutely terrific.
Wow. Thank you for that. I'll go get his book for sure. Jeff, how about you, buddy?
That's a tough one. I'm going to stick with my father. I think he is the man who made me the man I am today. And, unfortunately he passed away at a young age. And so, that probably left a lot of want and desire in that relationship. And I would certainly, I think that he's probably the most appropriate.
Okay. Thank you. Swapnil.
Yeah, for me, Rod, I would say Alibaba CEO Jack Ma, and then Elon Musk for me has been.
Jack Ma from Alibaba?
Yeah, Jack Ma and Elon Musk have been.
Oh yeah, Elon, three startup $1 billion companies. That's pretty freaking impressive. All politics or anything else aside, or personal feelings aside, he's one of my heroes as well. Love it. Okay, and Jack Ma is such a humble, beautiful leader as well. Those are great choices. Do you have a favorite quote?
I think I have to think about it. I have it. I'll think about it.
You think about it. I want to ask you the next question, and that is, do you have a set in stone planning process that you go through on a regular basis? And you do. All right, talk about that for a moment.
Yeah, I think it has to do personally. So waking up, having the right mindset, spending some time, meditation, then working out. So making sure my health is in top notch, having the clear mind. So the quote that you asked just came to my mind. So my favorite quote is, my biggest battle, my biggest struggles is through my own mind. If I can conquer my own mind, I think everything else is easy. So the quote that I like is, the mightiest warriors who conquers his own mind, right? Who has the ability to conquer his own mind. So for me, it's just, how do I get my mind? How do I get my brain in the best possible shape to make the best decisions possible? So for me, it's all internal. For me, it's about how to have the best health physically, how to be in the best shape, how to have a right mind so I can make the clear and right judgments and make the right calls.
Nice. Yeah, I interviewed Hal Elrod on my show. Beautiful guy. I wrote the book called The Miracle Morning, about waking up early, exercising, journaling, meditating or prayer, and he's that awesome answer. Jeff, what about you? Do you have a specific planning process or morning ritual or something that you could share? I know my listeners would love to hear that about this from each of you.
I don't. I mean, I've read a lot about everybody's morning routine and the importance of a morning routine. And I think it's fanciful to follow them. I've hired a lot of guys who tell you they're in the gym by 3:30 in the morning, and, they meditate and they pray and they do this and they do that, and they're in the office by 5:30. And I've never met anyone who actually does that. But I mean, for me, you know, my routine is, you know, I wake up early, I put 2 feet on the ground, and I race to the finish line, which is the same spot I woke up in that night. And I try to go as hard and as fast as I can until I just can't go anymore. And,
so I want to dig just a little bit deeper on you, since you answered that way. What's the drive there? What's driving you to work that freaking hard? I'd love to hear from each of you. Really, what is driving it? I don't know.
I don't know. I'm still trying to conquer my mind, like Swapnil said. And so I think, you know, I agree wholeheartedly with him. Your mind is either your biggest liability or your biggest asset. It's either in your way or it's not. And so, you know, I can't really tell you. I've tried to figure that out. You know, I don't want to dig too deep, because then it might change. I'm happy with the way it is, and I don't really necessarily need to understand it. I'm just trying to fine tune it and tweak it and get the best out of it, if you know what I mean. I wish I could tell you it was, you know, 3.5 cups of coffee, but it's far more than that.
Oh, fair enough. We're just trying to share some insights, get some nuggets to these, you know, people that see you guys up there, you know, on this pedestal and are trying to figure out their own way. And if they can get some tips, that's the reason I'm asking these questions.
Of course. Yeah. I think it's a weird mix of obsession and intensity and competition, right? Because I don't know where the nearest competitor is, but I know he's right behind me. If I don't stay ahead, he's going to pass me. And that's a big problem for me.
So that's a big one for you. It's competition. Albert, how about you, my friend?
No, I just love listening to what Jeff had to say. That was terrific. That was well said. Yeah. I'll just do a quick follow on that. My favorite quote is, the harder you work, the luckier you get.
I've got a few guys in my office that use that on their email signature. So
I love it.
And that quote, that statement sure is true. That's for sure.
How big is your organization, Jeff?
We've got about 400 employees today, which is down from about 1,100 about 5 years ago.
Okay. And Albert, you're over 1,000. I know. Where are you at?
Yeah, we're big.
Yeah. Okay. Fair enough. Love that. Love the humble. Thank you. Keith, what's your favorite quote?
So I got 2 quotes. One is in my signature line that my cousin came up with. He says, "Success is built on delusional optimism, paranoia, and an inability to quit." So that's one of our quotes. And then this is my business card. So Geld means money in Yiddish. And this here says, "It's better to regret not buying a deal than buying a deal you regret." So that's another one we got. And then I don't know what drives me. I take a little different approach from Jeff, because I like real estate in that it's so huge. It's not like a tech company where there's 1 or 2 winners. It's like there's enough of it out there for everyone to become wealthy, and it's about like having enough like just cash flow to live your life however you want to have, and have freedom of time, freedom of thought, freedom to spend time with friends, family, and I just like creating. That's a big theme. My wife and I, we work together pretty much, and we create buildings, we create communities, we just make the world a better place, create companies, invest in other entrepreneurs that are doing really cool things. So I'd say creating, building, and empowering is and just the freedom of having enough money coming in to do whatever I want.
Beautiful. Well said, buddy. Well said. Okay. So, last question, just to leave my people with a gift. Give me your 2 favorite books of all time, and you can go ahead and start, Keith.
Of all time, Jesus.
Or 2 or 3, whatever. If it's just one, it can be one. But just go.
I liked a book recently. I just read The Psychology of Money by Morgan Housel. That was a really interesting read, and I learned a lot about that, because I am sort of fascinated with money and accumulating, but it's like, why? And, you know, it had some good real.
Yeah. And your thing about geld, geld in Dutch, geld is money too. I didn't even pick up on that translation on that. That's funny. I didn't catch that, but anyway. Okay. Awesome. Albert, how about you?
Gosh, that's a tough one. I have a lot of different things that I like, but I'll just continue with my Colin Powell theme. He has so many good books, and I reread them all the time. So I urge any of your listeners to pick his books up.
Okay, Colin Powell's books. Awesome. Jeff, how about you?
Rod, I hate to admit it, but you were breaking up when you asked the question. I assume it's about.
Oh, no kidding.
Oh gosh, yeah. I was asking what the two favorite books are. I must be having a little interference here. My apologies.
Oh, I don't have one. I'm not a big reader. I hate to say it. I wish I had more time to read. I know it's instrumental in your growth as an individual and a business leader. Unfortunately, I don't have enough time to read. And so I don't have a favorite book or a set of favorite books.
Okay.
If anything, I probably spend more time in the Bible than any other book ever.
Oh, there you go. That's an answer right there. That's an answer right there.
That's about the only time I could make to read, to be honest with you.
Okay. No, that's a good answer. That's the ultimate book. Swapnil, how about you?
My favorite book is the book I read while growing up. It's from Paulo, Coelho, called Alchemist.
Oh, The Alchemist. Yeah, that's a beautiful book.
It's still my favorite.
Okay. Well, listen, I hope you guys have enjoyed this as much as I have. And guys, you guys listening, for them to come on here and share their time with you speaks to the hearts that these guys have, that they're here for no other reason than to add value to you guys. It is my absolute honor and pleasure to know each of you. And I'm very grateful for you to come on for this very special episode of my podcast. And wonderful to see you all again. And I'm sure that we will talk again, very, very soon.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 41411. That's mentorwithrod.com or text CRUSH to 41411.